There's a great deal going on with this panel. The tokenization of traditional assets is essentially, to me, a part of the major move forward or leap forward of what this means now that crypto is gaining more mainstream adoption. If you go back to 2017, there was still a lot of palpable skepticism about crypto from anyone outside the crypto sphere. Skepticism leaning upon hostility, if I would be completely honest. These days, what's really kind of cool to see as a trend is that not only is the average retail consumer accepting it, but frankly, some of the big whales and most of the institutions are also realizing it's not going away, and opening up these markets to consumers is a new opportunity for them as well as for the consumers to participate in capital markets that they were otherwise shut out from. So we have, pardon me,
man. You and I both, man, today. Something's going on through the computer. I'm not.
Did you ever get the tea? You should have got tea earlier.
Yeah, I had tea. I'm on to Zip.
That's good.
I'm on to the B12.
Well, we have Philip Gradwell coming in from Chainalysis. We also have from the CEO David Packham, the CEO from Chintai, coming in, and we have Scott
Melker. There he is,
the Wolf of Wall Street's coming on. Which is great for me. I mean, honestly, like three of the smartest people that I speak to on a regular basis in crypto. So pretty excited about the and of course we have Paul Caldwell coming on as well. Thank you very much, Paul.
Paul, you're on mute, I think. If you can just check your microphone, and David as well, if you can check yours. Great. There is too much knowledge on one screen, so I'm going to have to leave. I'm going to have to leave and let you guys take it from here.
Right. Like an elevator. We don't want to become overcrowded with knowledge. Gentlemen, thank you so much for coming in to talk about this. It's a pretty deep dive topic. Obviously, there's a lot to be said here. I'm going to kind of like throw out questions and then go up and down the field a little bit. So call it individual people so we all get a chance to respond, get everybody's viewpoints on this. So tokenization of traditional assets. I mean, like, I don't know, is this an extension of, what kind of, is this an extension of the mainstreaming, and what kind of opportunity does this present for the retail investor versus the institutional investor? Scott, I'll go ahead and start with you over there.
Sure. I think digitization obviously is inevitable. We're seeing it across every single medium. We've seen it with music. We've seen it with art. We've seen it with movies. Now we're going to see it with money, right? And of course, that's a small part of what tokenization and NFTs potential are. But I think to your point, it will be both institutional and retail. I think we're seeing a bit of the retail enthusiasm starting in the NFT space, but that's only scratching the surface of the real use cases of NFTs, which go way deeper beyond collectibles and art, of course. And I think that, whether these coins or projects succeed, that tokenization is largely a better way to do things. Think of it with any value exchange where there's a third party or toll collector in between. Tokenization is likely a superior option to what we presently have. And I'm sure we'll go deeply into what those look like. We get excited about trading Ape and Pepe NFTs and cartoons, but what happens when that's your mortgage and your car title and individual stocks without 48-hour clearinghouse and no epically bad events like Robinhood with GameStop when that happens? I mean, it's really just endless. I'll let everybody else obviously jump in, but I think that it really is the future of most transactions.
You're absolutely right. I mean, there are two parts to this, and we will talk about it as well. I mean, like NFTs have a whole universe of use cases that expands upon like what tokenization can do as well. But what do you think, Paul, in terms of tokenizing traditional assets? What kind of markets do you see opening up for retail consumers that probably just had too high barriers to entry before the advent of crypto?
Well, one of the companies in our portfolio, ODC, they are focused on this in this particular area. And I noticed also an unrelated company that I think is interesting, Dealbox, has, I think now 400 or so companies in their portfolio that they're STOing. right now, where they're STOing the cash flow of these businesses through secure token offerings, and that's a very interesting model as well. We're also seeing some of these dual listings coming up in the market, where you'll have an STO maybe in the U.S. market, and then DEX offering otherwise, and as sort of a dual listing. It's an interesting time. It's an interesting place, and I think, to Scott's point as well on the NFTs, collectibles and little green guys with their hair on fire for $5 is
for $5. That's not much. That's a pretty good ground floor. We probably should get in on that.
$5 million.
$5 million. Send me the link to those green guys. I want to pick some up.
Scratching the surface, because you have other companies that are like RCI right now, the timeshare company, looking at tokenizing weeks in their timeshares, and it just, the whole business is at this infancy stage. It's so episodic right now, and sort of news driven behind collectibles and art and these things. But I think that's certainly not the base for the business that'll get reestablished going forward as we mature in the space.
Yeah, you're absolutely right. I mean, certainly, it's kind of like NFTs have helped the crypto world find self-expression, and there's a lot of excitement about it right now. It's all Twitter ever talks about. But there's a lot more going on. I mean, David, I know that you have a background, I believe, as a trader. You have a traditional finance background. You did that for quite a number of years. And I know that that Chintai is, dealing with partnerships with traditional finance partners. What is it that they are looking for? What is tokenization solving for them?
I mean, that's a good question in itself. Most of the traditional finance companies right now are looking at it mostly from two aspects. One is that they're looking to leverage the efficiency gains they can get from tokenization and generally moving to blockchain. And for them, that mostly translates into their ability to fire as many white-collar workers they're paying hundreds of thousands of dollars a year annually as possible. But that's just the brutal reality of why they're so keen on it in one sense. But beyond that, they are very, very aware of the disruptive potential coming from this as well. And so a number of the larger players, and I'm talking some of the world's largest investment banks and asset managers, are very, very open to digital assets now. They want to experiment with this because they are aware that they could otherwise risk becoming, the next blockbuster video versus Netflix in terms of where they're placed within this whole ecosystem fits. So I think it's very interesting as a time. And talking about NFTs, just one thing I will add. I mean, I think what we're in with NFTs right now is the experimentation phase. It's classic kind of early .com. Everyone's trying a different kind of website to see what sticks and what's going to sell or not, and am I going to sell my puppies online or not? And I think what we're going to see though with NFTs is their true potential coming out as we see some of the really practical use cases coming through. I mean, we just inked a deal with a company to launch a $300 million blue carbon market. Now, why is that? What's the advantage of that, say, over just conventional carbon credits? Well, there's more carbon credits out there than I would take something like 350 years to sequester that much carbon in the existing carbon market, i.e. it's corrupt and not fit for purpose. Obviously, each of these tokens is completely unique. It's non-fungible and links to the origin of that sequestration of the carbon. Just one of many illustrations of the types of NFT markets I think we're going to see that really have a practical use as opposed to maybe more of a speculative driven one.
It's not exactly an exact indicator, but when I would speak to my friends who do traditional commodities coverage, at Bloomberg and Reuters and stuff like that, in 2017, talking to them about crypto, as I alluded to before, really, it's not an exaggeration. Say not only were they not interested, but they were legitimately annoyed by being asked. Like that was kind of the attitude at the time. So when we talk about our traditional finance, coming into the space, somewhat grudgingly in your experience, or have they seen enough of what the opportunity is that they kind of want to get on board with that? I don't know. What would you say to that, Philip?
So there's definitely been a sea change really since last March. totally right. I was there in 2017. Traditional finance was like, we're going to sit this one out. But honestly, with COVID coming in, I think traditional finance looked especially at Bitcoin and said, okay, this is an asset that makes sense in like this economic environment that we're in. Obviously, the price did what it did. And I think that's given them the encouragement to take that next step. And now everyone's going, okay, Bitcoin's getting a bit boring in a way. You can just kind of hold it. What are all these other things that we can do? That's why they're interested in ETH. That's why they're interested in DeFi, all the other layer ones that are doing well at the moment. And like, that's what they're interested actually in. You know, yes, there's some asset managers who want to provide Bitcoin to people who kind of want just simple exposure into crypto, but a lot of them are now going, okay, what else can we do in finance than just buy and hold an asset?
So I'm going to go back down the order of the opposite direction. But so I'll start with you again, Philip. But you know, what markets do you see as being like the first lowest hanging, juiciest, lowest hanging fruit in terms of tokenization, creating new access to them, new consumers, from whatever point of view you want to take that?
Yeah, I almost want to go back to something that Scott said right at the start, that, you know, we've seen kind of software eat the world in, you know, media and in real estate and in like taxi rides and so on. And you're right, it's coming for money now. But the key thing that happens in that transformation is that anyone is able to create and distribute, you know, whatever's in that industry. So now anyone can create a blog post. You don't need a newsroom or a printing press, but now anyone can create a financial asset. When you get that type of dynamic where it's incredibly cheap for someone to create a new thing, you just get a huge amount of innovation. And so, you know, the news becomes like Twitter or like TikTok. We're going to start seeing that in finance and in money. So where does that start? It's still going to start in the things like art. We've seen that with NFTs. Honestly, I think actually it's going to happen in the more exotic areas. Yes, you'll get some tokenization of shares, but it's kind of not that interesting. You can trade shares on Robinhood pretty easily. So people are going to start doing it with things that are exotic. Fun JPEGs now, maybe carbon credits next. I think it'll start at the fringes and then kind of work its way in.
Going from comic books to carbon credits, that's quite a, you got the consonants of that, but other than that, that's quite a leap, right?
I mean, I think, just on David's thing, and actually before I joined Chainalysis, I spent quite a while in that industry.
Yeah.
There, it's actually about, you know, in traditional finance, basically anything that's not on the S&P 500 is kind of considered an alternative investment. And, you know, carbon credits have actually done really well as a asset class over like the last decade, but people still look at it as like, we don't quite understand this. And you have big problems of connecting, you know, where it originates from, you know, to the actual emissions reduction that's happening. So it's still seen as a fringe area. There's still money moving into it. So yeah, big leap, but there's a lot of interest and momentum. That's
something we'll come back to. Anytime I want to lighten the mood with the crypto audience, I just bring up carbon emissions, and everyone gets so happy about that subject. I always want to interject it into any conversation. David, I know that you know, Chintai's doing some pretty cool things in terms of supporting both tokenization and minting of NFTs. I believe you're already working with traditional finance partners. I don't know if there's any that you can name right now, but if you can, please feel free. But like, you know, has there anything? First of all, you know, where do you see kind of that division? If you've got fractional, and if you're selling fractional NFTs, where is that branching off versus tokenization to begin with? You know, in terms of like what approach is most useful for what kind of asset? Have there been any surprises for you in terms of like these traditional finance companies coming in and actually using this in order to be able to reach new audiences, sell in a different way?
I lost you on the back end of that question, but in terms of
new opportunities for traditional finance. You know, what are the, you know, you got two powerful tools of being able to make NFTs, being able to tokenize, you know, interesting use cases. If you can name partners you're working with, that's great. If not, that's okay. But, you know, kind of interesting use cases you're finding in terms of like what people what traditional finance is doing with this ability, anything that's maybe surprised you over the past year.
The thing that surprised me most, actually, is I thought NFTs was going to be really, really hot about a year and a half ago after the CryptoKitties thing that led the way back in sort of 2017, 18. And it turned out to obviously have really manifested later down the line. And I thought it was going to be particularly big in gaming. And it's only really starting to take off there. I didn't see this speculation on the art market side, but like I say, I think the practical uses for NFTs, they really come in related to things like ownership certificates, other kinds of things that we use in the real world. But what's actually surprised me most from the traditional finance sector has been just how much interest there has been in fractionalized, tokenized real estate. I suppose that actually makes sense because it kind of goes back to what Philip was saying, which is that, trading stock tokens is not actually that kind of exciting, really. It's already quite liquid and you can do that. It's not really bringing a lot to the table beyond, in theory, bypassing the controls around markets. But then you've got a bigger question there around why, say, Binance had to take theirs down already, and are the regulators coming for other types of ones flaunting that? But the real estate's different, of course. It's you're adding liquidity to a previously illiquid asset class, and you really have to look at it from the perspective of a whole generation of younger people who are priced out of that asset class to some extent right now, and maybe, should we say, maybe a little bit cynical of government policies with regards to money, and thinking they'd like something more asset-backed than buying their bonds. So what we're finding, and this is what surprised me most generally, is that but not even just the sort of smaller challenger originators for real estate, and that's in the US, UK, across Europe and Asia. They've all been reaching out with a variety of inquiries, and they've got a strategy to do this, right up to some of the largest asset managers, real estate asset managers globally, with sort of like $500 billion of assets under management, as an example. They have a defined need, and they've stated it. We will be doing tokenized real estate issuance. We just are looking into the solutions and making sure we have a robust enough platform that can handle reg compliance, because they have licensing and reputational issues to consider.
Is that partially because of the hit that the commercial real estate market took because of lockdown and so forth? I mean, are we left with an inventory with a need for buyers? Is that what set that up to be more of a practical thing? I mean, I'll hand that off to you, Paul.
Yeah, I think so. I think that's a part of it. When you talk about real estate, there are various aspects, different things you could talk about. I mean, if you're talking about the Transamerica building, NFTing the Transamerica building, that's a different conversation than if you're talking about NFTing a portfolio of residential mortgages, for example, or if you're talking about a large title company like Stewart Title here in the U.S. Right. Starting to tokenize and considering NFTing titles. But there's, David said, there's regulatory, there's compliance, and then in every corporation like we have here, there's the desk, the office right down the hallway for me that's risk management, and that sometimes is sales prevention in some companies, right? But it's the risk management has to be clearly and thoughtfully considered as well. One thing, when you asked earlier about these, the low-hanging fruit areas on traditional assets being tokenized, I see those as entertainment and gaming. I see a ton of action right now in gaming. I had 3 phone calls yesterday with companies in that space. Entertainment, what can be done with NFTs in the ways of serialized messaging through fractionalized programming, things like that are now. I mean, that's a now thing and starting to show up. And then if you look at payment platforms, for example, that have fungible baskets starting to come available in their digital assets portfolios, living alongside cryptocurrency positions like at OGPay, for example, inside that digital assets portfolio. Cryptocurrencies is one, but then you have fungible baskets and you have NFTs, and these can rebalance automatically through some really well-conceived algorithms that automatically balance these assets. So, and it's that tokenization of those formerly traditional assets that allows that rebalancing in fungible basket to to happen. So, and then the NFTs are sitting there by themselves, non-fungible. How do you value an NFT? Not today. It's purchased today and it has a value today. But how do you make a market when you're trying to determine what the change in that value is on that NFT over time? So is it worth more or less today than it was yesterday? And how does that become universal? How does it actually marry itself to a portfolio like a stock traditionally can, right? We know today Apple's worth more or less today than it was yesterday, and its contribution to my portfolio. But how does that work with NFTs, with these non-fungible tokens as and what class are they? Are they in a class of their own? Are they an asset? Do they get booked and billed as an asset? How do they hit the balance sheet in a commercial environment? So clearly, there's a lot of work to do. But I agree, just generally, this is in the stage of its infancy, and there's a whole. I mean, I think the future is real bright for this whole tokenization of digital assets. To us, in our fund, it's the future.
Yeah. And it's happening so quickly now, honestly. I mean, if you look at just the hype cycle itself has reached a fevered pitch so quickly, especially around NFTs. Never stops to amaze me. Every other tweet on Twitter right now, all over Telegram, all over social, everywhere you go. Scott, I know that you are essentially, you're all about educating and empowering the private or the retail investor. I think that's something that you certainly believe in. Is this bringing some of those utopian ideals that are in the Bitcoin white paper about democratizing access? Is it finally creating some of those opportunities that we've been hoping for the past 11 or so years?
Yeah, once again, I think it's scratching the surface. I think it's another facet, another lane, perhaps a parallel rail to, Bitcoin, Ethereum, and all of the other things that we've discussed. But I do believe that this has the potential to do that in the future. I mean, Paul touched on gaming. Something astounding that I looked at yesterday, I read an article that said Las Vegas had a record month, which is pretty crazy considering COVID and coming out of it at about a $750 million month across all casinos. Axie Infinity did $1 billion in a month, right? So Axie Infinity did about 30% more than all of Vegas in 1 month. And that's one metaverse gaming platform. Now we have, the Star Atlases and Alien World and Chain Guardians and all of these platforms that are going to launch. And so I think that there really is a future here, especially if you're younger and you're well versed in in programming and social media, where you can live an entire life probably online, get a job in the metaverse, never exist in the real world to any great degree, and probably out earn your parents. And as crazy as that sounds. As crazy as that sounds, with the potential of what we're seeing in the metaverse based on NFT and these economies within it, people will be able to do effectively everything they do in the real world there. And that will be a complete opt-out of the legacy system, as you're saying, in a way to basically create your own path without being subject to the systems that exist. It sounds nuts. It sounded crazy to me the first time I heard it, but the more you dig into it, the more it's a reality. I mean, why not be an art dealer in the metaverse and sell NFTs in a store that people can visit in virtual reality? Why not open a restaurant? Why can't DoorDash be ordered in metaverse, delivered to your door, so you never have to take your helmet off and you can keep existing? It really is nuts, but I think that is the future that we're looking at. Certainly not for people my age, maybe in my 40s, but for my kids, certainly.
Yeah, well, it's interesting. I was interviewing one of the co-founders of Rarible the other day, and he made the point that he owns very little in the physical world, that digital, but he has warehouses in digital. Like essentially, he was like, my laptop is the biggest, is the most valuable possession that I actually have. And I kind of thought, it's kind of like, because I'm very conscious of being an old man in this sport. There are I talked to a lot of people much smarter and younger than I am. Alex from Rarible was just one of them. But I mean, yeah. I mean, it's huge. For that matter, spoke to OpenSea last week, and they increased their overall sales by $1 billion in the course of 1 month. I mean, it's like from 1 to 2 billion. In other words, their trajectory is virtually unfathomable in any other business I've ever talked about personally. Is this a story of digital ownership and that being a bigger priority to millennials and to Gen Z? You don't think so? What do you think?
Yet. No, not yet. I think it's a FOMO hype cycle, and they're just excited to show off their JPEGs. I hate to say that, but I think that there's an underlying sort of wave of what you're talking about, but I don't think that that's what's necessarily driving it. That said, if this market continues, even if there's a bit of a bubble pop and we see a more reasonable sort of organic rise, I think OpenSea could be a Coinbase level platform, right?
Oh, yeah.
And as much as that also would have seemed crazy to say a few months ago, they're definitely leading the charge, and it's an incredible market. But no, I don't think that it's about digital ownership. I don't think that there's an ethos beneath most of it. I think most of it is I'm going to buy something that I can sell immediately for a lot more and show off as my Twitter avatar.
So is that what the hype is about? What would you say, Paul? I mean, I've heard it. When I first heard it was it compared to a form of self-expression. That struck me as a bit silly, 6 months ago. But now I don't know. I mean, it kind of seems to be like people are making statements about themselves through collections and art within NFTs, as well as investing. What's driving like the gigantic swell of just average retail investor interest?
I think it's a different thing from when you start talking about average retail investor interest versus the average person that goes out and buys an NFT. I think they're expressing different things. I don't necessarily believe those.
So buyer, maybe not retail investor per se, because that implies that they're buying for to make an investment. But what do you think? Like, if you look at how many people are on board, and the fact that everybody from Lala Anthony to Joe Exotic reaches out to me about their NFT drops, literally, right? I've done interviews with them all. What is bringing this gigantic groundswell of involvement, both from creators and buyers?
I think it's a keen interest in the new and the novel. I think there are people that people use third-party validation these days for everything. It's almost as though people live their lives through their social media and the opinions of others more than they just self-express and have their own opinion of things. In fact, they form their opinions based on others' opinions without really maybe being so well informed themselves of the facts. And media and new media and social media, all these things sort of support that kind of thing. I believe that people are attracted to things that are new and interesting and exciting. And so how does OpenSea get a 100, get a double in a month? How do you do that when you're already at $1 billion? I mean, that's scale on scale, right? That's not let's scale the business. That's scale on scale. How do you do that? Well, you don't do that if you're OpenSea. OpenSea didn't do that. They provided a context to house content on top of an infrastructure that people are already interested in. And then that migration sort of goes there. So I don't want to necessarily make it analogous to the gold rush in the US, but kind of is. And, when you had the gold rush in the US, most of the gold that was mined actually was fool's gold. And if you can look at this like that just a bit, you'll see that that's the case now. But when does that normalize? I remember when MP3 came on board, and at the time I was managing venture. Now it's private equity, but back then in venture, oh my gosh, I mean, everything was moving to digital music, digital music files and MP3 files. MP3.com comes along. What'd they do? They added structure to the space. What did Amazon do with books? They added a structure to the space, a digital structure to the space that was fragmented. So I think most of this is about organization, and I think Scott's point should be well taken when he said OpenSea has the potential to have a Coinbase like outcome. I mean, this the reality is that OpenSea is getting there right now because they are organizing this unorganized space in a way that people can appreciate. They make it easy to engage with them, very easy, very simple, and they make the context such that one can come in and express themselves, their views. They can create their own. They can become a creator, not just a consumer. And I think people are naturally attracted to that.
Mm-hmm. Yeah, I agree. I mean, definitely. And they have that first mover advantage, having been in the space for a staggering 3.5 years. I mean, you know, they've been the dominant player, because at one point I was like, you guys have been around about 2 years, right? And they're like, we've been around 3.5 years. And I'm like, ooh, like I remember what 3.5 years, I wish it could be young enough again to feel like 3.5 years was a super long time.
That's if you can't put the business plan, right?
Right. I mean, and what, you know, they were pretty real about the fact that, like, did they account for that level of growth over the past month? No. I mean, how could you? How can you plan for that? But, you know, David, when we talk about in terms of traditional finance players, you know, they've got to have a different perspective on this, and they can't all be driven by Beeple's Christie sale, for example. I mean, there have been some notable sales, and there's, you know, CryptoPunks and lots of cool projects spinning off that, and Crypto Kitties and so forth. So obviously there's some notable things. You know, what is I think we would all agree universally that art and collectibles are not necessarily where it's going to end in terms of NFTs, in terms of expansive use cases. But for the time being, what is bringing traditional finance? What is their attraction to getting into the NFT space? Not only, you know, potentially holding NFTs, but also digitizing assets as NFTs.
Well, yeah, I don't think you'll find many big asset managers or banks buying up the apes and the various other NFTs currently going for millions of dollars right now. I think if you assess just generally assets and ask yourself a question, if there's a correction in the market, do I mind holding it for the next 5 years? And if so, what can it do for me by way of utility and or yield? You've got some clear answers with company stocks or maybe some of the really high quality network tokens, right? And things like that. NFT is a bit less clear, and that probably you have to ask, therefore, why are most people buying them now? Would they be happy holding them at a big loss for 5 years until it regains value? What does it do for them? So really, from a company perspective, they're interested in NFTs where they suit specific industry needs and use cases, seems to be my take on this. So, you know, the example I gave earlier about the carbon, this is a blue carbon market, relates to seaweed being grown and taking it out. That's just one of a multitude of examples. Another one is agricultural land. That's a similar kind of case again. It's a specific NFT market to fit an industry use case, and they want to build out an application on the top of that that utilizes our engine to ultimately enable dynamic issuance and market deployments. But in that case, again, there seems to be a common need in most of these use cases for some forms of regulatory restrictions around that, be it just mandatory KYC on the market or they're being able to, you know, geofence who can participate or not. And, you know, that then you get into an interesting intersection between just what type of instruments are likely to sort of be able to operate completely on the public chains, you know, without really any controls, if you want to keep everything on chain, and what ultimately needs to operate in some sort of alternative environment where you can have those controls. And I think that's going to go hand in hand with the regulators globally just starting to mature their thinking, publish guidance out, and so on and so forth. I mean, NFTs are a great example. Right now, they're totally unregulated, but you know, you're seeing $96 million transactions going through. That's going to get the attention of the regulators in some form, and then who knows quite what they'll do beyond that. But you know, then you've got the other question, which is what happens if the US regulator puts some sort of controls around it, but the other countries don't, and how do you stop that? And these are all the sorts of things that, as an industry generally is maturing, we'll all have to face, and that's where innovation comes into play again. You know, you get the innovation on the tokenization and the product side that was talked about earlier, but then you also have the innovation around the solutions to these types of challenges that maybe come from regulators too.
Mm-hmm. You know, obviously, as I alluded to before, one of the nicest words in the crypto language, regulatory compliance. Everyone loves to talk about it. You know, I run into less purists than I did 4 years ago, honestly, with people who really try to maintain that no regulation is the appropriate amount of regulation. If anybody has that, I mean, does anybody have that position on this panel? I think everyone's kind of come around to, you know, a little bit of regulation is good.
Well, I think the ICO boom kind of largely did that, right? Which is we basically tried out a really cool experiment where anybody could carry out a securities issuance with no restrictions and controls. And then, unfortunately, we saw why there were some restrictions and controls in place related to, you know, two guys with a white paper and an exit scam. So I think we kind of all got at least a sense of why some of the controls have been put in place in the first place, even if they're not, if they're onerous and stifle innovation. But
But I missed my opportunity to. The world has missed its chance to buy in on Justin Coin. I needed to be there in 2016. It would have been wonderful. Now I'll have to NFT pictures of my dog. But Philip, so I imagine you probably have some pretty distinct opinions on this. You know, Elizabeth Warren has said some unfriendly things, particularly about fractional sales of NFT regulations. The SEC has not only been threatening, but has actually gone and stopped in some cases sales of what they deem to be unregulated sales of an unregulated security. I know that happened with a couple of sports stars who were just doing individual sales. They had to stop. You know, what do you think the appropriate level of regulatory control is going to be? Where do you see that going right now?
So it's going to be a journey. The key thing I think the regulators understand about crypto is that they could regulate the venues even if they couldn't regulate the assets themselves, and that's why, you know, exchanges have KYC and AML in place. As we move into a world of more decentralized finance and NFTs, it becomes harder and harder to actually regulate the venues. And so regulators go, okay, we actually have a legitimate role, as David said, in ICOs. There was a lot of consumer harm, like some people lost quite a lot of money. So there's a role for regulation there, but they don't know what the point of regulation should be. And like, honestly, that's an ongoing discussion. Like, it's very hard. We will start to see some decentralized platforms bring in AML solutions, working on the technicalities of how that actually works. So I think there will be a voluntary effort, but it's a very different game. And, you know, I talked earlier about how finance might look a little bit more like social media. You might have more almost content moderation policies than you might have like a written list of rules and regulations, because there's no other way to actually regulate it.
Mm-hmm. What do you think the point of regulation should be?
It's probably the key thing in understanding where the point of regulation should be is to understand if something goes wrong, how can you rectify it? Right. Which means you've got to really go, okay, where in, you know, the transfer of assets can I actually find someone who might be able to reverse the bad thing that happened? That gets very complicated as you get very multi-chain, you know, with assets that can be wrapped and moved across chain. So I think we're still trying to find that place, but you've got to put the regulation at a point where you can actually solve a problem if one arises. And we just got to go and hunt for what that is.
Mm-hmm. David, I know that you deal specifically with managing kind of ongoing global compliance. How do you put together a picture like that? I mean, that's such a big puzzle. You know, it's like trying to put together a 1,000-piece jigsaw puzzle where all the pieces can randomly change shape at any time. How do you even manage that?
It's an expensive fucking nightmare, if you excuse my language. And I spent my last 2 years of my finance career working in reg compliance, so I do have some background in that too. And basically the problem is as well for anybody in the business generally, it doesn't matter whether they're on the digital side or on the traditional side, trying to keep up with the sheer breadth of rules across the world from all the different regulators is incredibly expensive and difficult to do. And there isn't a standardization, even as something as simple as how they publish the rules out. So what we're doing is we're putting together at least the first data set we're aware of that can feed into regulatory compliance rules engines that can enforce on blockchains. So we're carrying out a global regulatory rules mapping. And we started with Singapore, our home jurisdiction, and we're just going to keep going from there and then keep the data fresh and live. And we'll make it available to other companies that want to utilize it too, because all of digital assets is going to need access to these rules. And then it's up to them how they ultimately use them. In our case, we're going to be utilizing it to enforce on our chain, on our network, so that we can also enforce that for the clients when they deploy these markets and so on, and carry out the issuances related to the underlying asset classes. But I think when you get onto pure DeFi, there are other types of solutions like Chainalysis and what they're doing, which are going to be really valuable too. But it is an incredibly difficult area. And if you go back to, I guess, that question you asked Philip earlier, what is the point of regulation, or what is it aiming to do? Broadly, the overwhelming remit from the likes of the FCA in the UK and elsewhere is to protect consumers. They almost want to try and protect them from themselves. And I guess that's a noble cause, but it's very open-ended. And what it tends to mean is that you can get rules that pass that are not particularly well thought through. And particularly where you have something like tokens in general, they're being treated like traditional asset classes, even though there's widespread agreement now that it is a new asset class and needs to be handled accordingly. So it's very challenging, and I think this is part of the evolution just generally of what we're all doing here. And I think we'll see some innovative solutions that start to come out that really help more and more companies stay on the right side of compliance as those types of rules get rolled out.
Well, thank you so much, guys. Like, honestly, this is a panel that I got to put together myself. So really, like, I've spoken to all of you before and interviewed you for my articles. Legitimately stacked this panel with some of the smartest people that I know in crypto. So thank you for taking the time to speak with me. I really appreciate all of your insights and if you sharing them with our audience today. I believe that that we are at time at this point. So. We're going to move on to the next panel. And thank you very much, everyone.
Thank you.
Thank you.
Thanks, guys.